Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy under $5 that could double or even triple your money. Now, before we dive into the video, remember that all of these companies are extremely risky, so always make sure to do your own research. Also, I would love for you to comment down below what your favorite stock to buy is right now. It doesn't have to be a cheap penny stock. I just want to know what you're buying so I can make videos that are relevant to you. For more videos just like this one on the best stocks to buy, remember to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. And without further ado, let's jump right into today's stories. We're going to start off this list of the 9 best cheap stocks to buy under $5 right now with ticker symbol AVAL. This company is a Colombian holding company, and it has a majority ownership and stake in 4 different Colombian banks. This company's properties actually make up roughly a quarter of Colombia's overall banking market. So banks have historically earned very high profit margins, thus making this company a phenomenally cheap stock to buy, which also offers an impressive dividend of around 20, which is absolutely insane. However, the reason this stock is a penny stock, currently trading for just $2.07 right now, is because recently Colombia elected a new president back in 2022. And many investors ended up dumping their overall shares because they didn't like the president. However, there doesn't seem to be much actual economic damage over in Colombia, which was originally anticipated due to this presidential election. So we can conclude that this was somewhat of an overreaction, where shares fell by around 70%. And since the company is so cheap, they're trading for less than 6 times their forward earnings, which is pretty amazing. Ideally, we would want companies trading below a PE ratio or PE multiple of 10 to 12, and considering that this company is already trading for a phenomenal share price with only a 6-time PS ratio with an absolutely insane dividend yield, this company is set for future growth. Many professionals also believe that investors could double their money with this company because experts believe this company should be worth at minimum $3.30 and at maximum $4 over the next 12 months. So this is definitely a company that you would want to keep on your radar, especially if you are a dividend investor. Up next, we have ticker symbol LLAP, and this is a technology company that operates in the space industry, and they're most notably known for producing satellites. Recently, they have scored a $100 million investment from the defense giant named Lockheed Martin, ticker symbol LMT, which is also a phenomenal company to buy that I personally own. However, back to ticker symbol LLAP, this company's share price soared by around 70% after they won a gigantic $2.4 billion contract. And this contract would require the company to build around 288 low Earth orbit satellites. The reason why the share price surged by 70% and how there's still phenomenal upside in this overall company is because the company is only worth around $250 million. So that $2.4 billion contract is substantially more than what the market believes this company is worth. This means the company could more than quadruple in price from $1.75, which is what the company is trading at right now, up to $7 per share. Now, the main issue here is profitability. However, if the company continuously lands contracts and they increase their revenue, which that $2.4 billion contract will most certainly help, this will allow the company to be able to start to generate positive earnings per share for their EPS, meaning that the future earnings reports for this company are going to be absolutely phenomenal. That's why you definitely would want to keep this company on your overall watch list, and out of all of the companies on this list, this is one of my personal favorites. Up next, we have ticker symbol RXT. This company is an enterprise infrastructure solutions company, and their share price used to be $21 per share, even though right now they're trading for $1.93. So why has their share price absolutely collapsed? Well, the reason for this mainly is that they have a large but shrinking legacy cloud hosting business. and management currently is trying to turn things around for this overall company. However, why is the company on this list? Well, I actually think that management could turn this company around over the long term, and this is going to allow the company to achieve growing revenues and release strong profit margins. Another reason why their overall share price dropped from $21 down to below $2 is because they had a ransomware attack back in December. But if we look at this company fundamentally, the company trades at just 0.2 times their revenues, meaning that this company is substantially undervalued, and historically, this company has been very profitable. So, with good profits and great revenues, this company is set to surge. Most analysts either believe this company is fairly valued right now at around $2 per share, or they believe the company could surge by 3 times over the next 12 months to $6. So I would leave that up to you. Always make sure to do more research on this particular company or any of these stocks before you spend your hard-earned cash, and I would love to hear your thoughts down below. Up next, we have ticker symbol ABEV, which is actually a subdivision of the brewing giant Anheuser-Busch, which we talked about in our previous video. So Ambev SA, ticker symbol ABEV, is going to be the South American division of this brewing giant. So clearly they sell alcoholic beverages and other types of drinks. This particular company is very attractive because over in the Latin American market, in South America, the competition is extremely low for craft brewing companies, meaning that this company has a very large market share. On top of that, I really like to see how this company has a very strong balance sheet, and their balance sheet is where they keep their assets and their liabilities and their cash. And this particular company has a very impressive net cash position, meaning that even if negative macroeconomic turmoil decides to infiltrate Latin America, this company is more than primed to not go out of business due to their net cash position that they have on their balance sheet. Now, my only problem with this company is that they're currently selling for around 16 times their forward earnings, and ideally, like I said earlier, I would want that to be closer or below 12 for their price to earnings ratio. But to offset this, they are trading for a relatively cheap valuation of just $2.69, while professionals believe this company should be worth anywhere between the range of $3 and $5. To add more fuel to the flame, this company also gives us a very good dividend, coming in between 4 and 5 according to their current price. More than that, the company is also increasing their overall year-over-year profitability because as of their recent fourth quarter results, they showed a 36% increase in their overall profitability, which is absolutely amazing. So overall, this company seems like a very good, solid investment if you are a dividend investor. Next up, we have a company we also briefly talked about in a previous video, and that would be Matterport, ticker symbol MTTR. Matterport has actually fallen in their share price by around 80% since their all-time highs. However, many investors believe this company is set for a major comeback. And I think this company does have a very interesting business model. And if you're not familiar with what this company does, essentially, they serve realtors and landlords by making 3D virtual representations and models of their buildings. Therefore, people can go on completely virtual tours, and it can also be used for various metaverse applications regarding augmented reality. The company currently is generating around $136 million worth of revenue, which they brought in last year, but experts believe this company will make between $150 to $170 million in revenue in 2023, so clearly the company's revenues are growing. Right now, the company just trades for $2.66, while experts believe this company should be trading between $3.50 and $8 per share. Thus, this communicates to us that this company is undervalued as of right now. However, they do have a relatively high market cap compared to the amount of revenues that they're bringing in of around $774.221 million. But as the company increases their overall revenue, their PS ratio and price to sales multiple will decrease, making this company an even better buying opportunity. So always make sure to go do your own research on this company, but I know this is a very popular company that many investors seem to be drawn to. Next up, we have Agora Inc., ticker symbol API, and this is a technology company that offers chat room support, live video, voice, and messaging hosting platforms. In 2022, this company's revenues did fall, but professionals believe this small decline year over year will not be repeated in the future, meaning that they believe this company will end up growing as time goes on. But regardless about what's happened in the past, the company looks absolutely primed for growth, considering that experts are expecting the company to bring in a solid $157 million worth of revenue this year, and this reflects very positively on this overall company, considering that their overall market cap or market capitalization or market value is just $384.691 million. So that is a lot of revenue for the company to only be worth slightly over 2 times the amount of revenue that they're bringing in, making this a very cheap company to buy. On top of that, my favorite part about this particular company is that their market capitalization is less than the amount of cash they have on their balance sheet. And this means this company is objectively undervalued right now. For instance, the company is worth around $385 million, but on the balance sheet, the company has a cash balance or short-term cash equivalents of $428 million, meaning that they have a negative enterprise value, thus communicating to investors that this company is a screaming buying opportunity. Considering that the company is already undervalued, you are getting a phenomenal deal. This is another reason why analysts believe this company is undervalued right now, because it should be worth between $4 on the low end and $10 on the high end, even though the current share price is trading at just $3.22. So another phenomenal buying opportunity for this company, and it's an opportunity for you literally to triple your amount of money in this company over the next 12 months potentially. Up next, we have ticker symbol SWIM, ticker name SWIM. This company is a consumer discretionary company that designs and manufactures in-ground swimming pools. However, as of late, this company has received a lot of hate, and I'll tell you why. The company went public back in 2021, and they managed to reach a $30 per share stock price. However, since then, the company now is just trading at around $3, coming in at just $2.97. So why has this stock absolutely plummeted? Well, the first thing is that I actually think the company is undervalued right now, considering that the market is valuing this company at close to $340 million, but the company has generated annual revenues of $600 million, meaning that they're bringing in more revenues than what the company is actually worth, again, signaling to us investors that the company is undervalued. Right now, the stock is going for just 11 times their forward earnings, meeting our threshold of below a 12 PE ratio, which is very favorable. But however, that is a forward ratio because their current ratio is still relatively expensive. But on a revenue standpoint, this company is undervalued, and professionals also agree with that. They believe this company is trading at a discount right now, that they're undervalued, and right now is a great time to buy this company because they believe the company is worth at minimum $3 and at maximum $6 over the next 12 months. So this company is either around their fair value price, or you could double your money over the next year. So that choice is up to you, and always remember to do your own research and look further into this particular company. Up next, we have UWM Holdings Corporation, ticker symbol UWMC. This company is one of the United States' largest mortgage origination companies. However, over the past few years, this company has had a very difficult time, especially recently because interest rates are soaring and not a lot of people are taking out mortgage originations. So for instance, investors have accurately dumped their shares of mortgage-based companies such as UWM and Rocket Companies Inc., ticker symbol RKT. And the reason for this is because during the years of 2019 and 2020, we saw their revenues surge from $1.2 billion up to $5 billion. So this company was making money hand over fist. However, from 2022 onwards, we have seen the company drop back to around $2.1 billion, and that's where their revenues have somewhat solidified. However, professionals expect UWM to return to their overall former highs in growth in the year of 2024. But experts still believe this company could be undervalued. The company right now is trading at around 13 times their expected 2024 earnings, and the company pays a very good dividend of 8.5%. Right now, the current share price trades for $4.62, while professionals believe the company should be trading between the range of $3 and $5, which is exactly what it's trading at right now. So you're not going to experience much growth for this company until after 2023. However, in the meantime, you are going to be exposed to that phenomenal dividend. Up next, we have ticker symbol AMBP, and this is a metal packaging company that makes packaging materials, particularly aluminum cans for drinks such as beers, sodas, juices, and even sparkling water. Many investors have already been drawn to this company not only for their cheap share price of around $3.87, but also their high dividend yield coming in between 9 and 10%. Overall, I would say this company is pretty good, except their forward price to earnings ratio is still relatively high, coming in at 14 times. But with that being said, in general, this is a very stable company, and they are consistently improving their overall supply chains. Right now, the company trades for $3.87, while experts believe the company should be worth between $4 on the low end and $8 on the high end. Again, with that phenomenal dividend yield on top of future potential growth, this company is definitely one that you would want to look further into. With that being said, those were the 9 best cheap stocks to buy right now under $5. For more videos just like this one, remember to go and annihilate that like button right now. Comment down below your favorite company that was on this list and which one that you are going to look further into. Subscribe if you are new, and I will see you in the next YT video.